Hello and welcome to another update video about AGIX. Well, AGIX broke below support here. Unfortunately, it broke out of the descending wedge to the downside. Not a good sign, and it invalidated this 1-2 setup. And I didn't rewatch the last video, but I'm pretty sure we talked about the likelihood increasing for the break of support. Otherwise, I wouldn't have added the 88.7 fib level, and I wouldn't have made it orange. So yeah, the likelihood has increased anyway, and now it broke it. So I have to take the support off the chart because it's not relevant. And the 1-2 setup here has to be taken out as well. Now that leaves us only with one viable bullish setup left on the chart. I would say likelihood is still there that we find support here, but certainly it increases now the size of that support range here. So it basically took out one wave degree. Yeah, it took out one wave degree, and we now have to say that the entire move that started on the 8th of February, that high, or 7th of February, that is all a correction, and that's fine. It's just that as long as we hold 17.8 cents, that can still hold as bullish support, but a break below that will then make me primarily focus on bear market lows. Already now I'm getting a bit more concerned about bear market lows, given that one of the bullish setups has been invalidated, but we still have a chance now of either of the golden ratio, which is at 27.8 cents, or of the 78.6 fib level at 17.3 cents to find support there and to rally in a third wave. But I can also tell you, and I think that was the message in the last video as well, that there was no, and there is no sign that AGIX has bottomed. Yeah, it is now basically, as you can see, without the wedge, we see it a bit better. It is now touching the golden ratio, the 61.8 fib retracement. However, the problem that we have here is there is absolutely no reaction to it. I would not be surprised in the current situation if it breaks below the golden ratio. And this is then down here around the 78.6 retracement. It's really the last support it has, the last bullish support. Yeah, and overall, I mean, let's zoom out a little bit. So you may remember it. We've been talking about it in these videos early days when I started tracking the wave count for AGIX, that it's a lower reliability chart anyway due to the lifetime downtrend. So this was the first possible impulsive price move, or maybe even a diagonal, and this is the first decent correction. So holding this will give us some clarity that we can get into an uptrend. Until then, it is higher risk. But yeah, the levels should be clear. It's either 27.8 or 17.3 cents. And if it cannot find support down here, then I think we have to prepare for new bear market lows. Now, the good news is down here, there should be plenty of support, a previous wave 4 low. Sometimes the wave 2 setbacks, they come back and retest previous wave 4 lows. So if we really break and sustain below the golden ratio, which is 27.8 cents, then I think we have to expect a drop, first of all, to 17.3. That would be quite a bit of a drop. I mean, we talk here about, around about 35%. So if we come down to that level, we have a really decent reward to risk ratio. So I might add a little bit when we get to that point. But I also know that below the 78.6 fib, I leave it a little bit of space that I want to be out. Yeah. Because then typically they are not going to work out. They still can, but it's just from experience, it often doesn't. They often don't work out any more than to the upside. But for now, the move down is corrective. We probably deal here with a WXY correction, I have to say. So the move down was clearly 3-wave W. This was an X wave, and the move down should be a Y wave. So that's sort of what I'm watching. And then here maybe the A wave, the B wave, and now the C wave down. That's at least how we can make sense of it, because this was a 5-wave move in A, B wave, and now the C wave down. Just need to be watching when it could be finished. In terms of target, we can also look at targets based on the length of the A wave. We go to the high of the B wave. A common one is the 1-to-1 ratio. That would point towards 23.6 cents. So take a look at that one. And if we look at the WXY, we can also calculate the target for the Y wave. This would point to the 1-to-1 ratio here, which is at 20 cents. So it's all in the yellow support range. So again, the comments of this video pretty much align with measuring the targets, the other way around, the Fibonacci extensions for the completion of the C wave or the Y wave. All right, that's my update about AGIX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.